Now, collateral is just an asset a lender accepts as a security for a loan. And collateralization being, and this is how I define it, just keeping it simple, I'm using one asset to acquire another asset. Now, what can you use as collateral? There's a ton of stuff. And most people that are watching this are aware of this. So real estate, everybody knows you can access the equity and place the equity as collateral for a loan, such as a HELOC, home equity line of credit, or you could cash out refi a property and use the proceeds then to roll it into another property. Business, we had someone in our network place the business, the assets and the receivables of the business as collateral for a loan, which that person then used to buy the property from which the business was operating. So now this person has a business in that building, and now they own the building too. They use the business to buy the building. And by the way, there's 3 other tenants in that building now paying rent, using one asset to acquire another asset. Stocks, everybody looked at Elon Musk. Elon's deal with Twitter was all over the news. By the way, fun fact, how incredible from a marketing strategy, and Elon's got a team, how incredible was that you basically have World War III breaking out. You have a pandemic, you've had all this stuff, and everybody was talking about Elon's deal. That's pretty good in a world full of noise. But anyway, what was important about that deal for me was how it was structured. And Elon placed a lot of Tesla shares as collateral to get an asset-based lending loan at a very low interest rate, which he then used to finance. So he put up the majority of the cash to finance, and then investment banks were fighting over each other to come up with the rest of the money for him. He did that using a stock as collateral. So you can do that. CDs, I had a mentor doing that 20 years ago. He would put 100 grand in the bank. The mentor did that in the 70s, by the way, not 100 years ago. In the 1970s, they paid double-digit interest rates on that 100 on any CD. So you would put the $100,000 in the bank. They would pay him a double-digit interest rate, and then he would then go back to that same bank, get a loan of 90% of what his CD was valued at, or at that stage, and then he would use that money to go buy real estate. He has his CD earning, let's just say 10, 11, 12%. He borrowed it around 10. And now he took that $90,000, bought real estate with it, that cash flows, and he's paying back the loan. His CD is still growing in the one vehicle, and he has real estate now that he owns in the other vehicle. Gold, silver, art, I've done that. You could place your gold, silver, and art as collateral for a loan. Cryptocurrencies, same thing. You could place your Bitcoin as collateral for a loan, and then life insurance. With all of these, you have to be careful. With stocks, don't try this one at home, kids. If you don't understand how to manage margin and manage collateral, same thing with cryptocurrencies. That's where you could really burn your fingers, like a lot of people did. When markets go up, great. When they come down, you're going to get margin calls. You have to know how to manage collateral. My favorite one of all of these, I've done real estate, I've done business, I've done gold, silver, art, and I've done cryptocurrencies.